Alright, so we start off in a range. We're gonna start, this will be our high, this will be our low, and obviously if you took a short here and you put your stop loss here, you would get stopped out if price went back to this spot. And same with if you took a long here and put your short and put your stop loss there. Your liquidation, depending on your leverage, would be up here and down here. That's why we call these liquidity zones. I'm sure you all already knew that, but let's just make sure we know what we're talking about here. And of course, we immediately go and break into our liquidity zone. So if I had longed here, if I saw this reverting, took a long here, I would be stopped out right here. But if I went short, if I got stopped out here and went short, the price goes right back up. And your liquidation price is up here. And you can guess what happened to those people. And then we just play around in the range a little bit. That's not really important to what we're talking about. We'll talk about that in a later lesson or a later video. But what happens right here is quite interesting. You'll see up in this corner the volume metric. That's telling us the volume for each one of these 3-minute bars. And if you pay attention, you'll see it's dropping off significantly. We're at 30 million right here, around 30 million in these bars, and we're around 10 million in these bars. And right when we get to the lowest 9 million, that's when the big money decides to drop 1.2 billion of volume. You'll see right here, less than 10 million into 1.2 billion. Now something a little bit funny happened when they dumped this money. I'm not sure if that was a mean reversion bot or somebody just decided they wanted to go long into this big dump or what, but what it ended up causing, this indicator right here shows 25, 50x, and 100 longs. And you'll see we got the 100x, but we missed the 50x because of whatever was happening here. We went from 10 million to 1.2 billion, and then so if you saw that and went short, you'd get liquidated somewhere in here. And of course, that's when we buy with another, or that's when this would be a short, and this is when we cash out the short, right when the people here shorting got liquidated. And you can see that that's happening because you'll see this purple bar right here is our liquidations, and you'll see we don't have very many. And as soon as we start getting some, right on this bar, right here's our number, liquidations is up here, 91k, right up to basically 1,975k. And those liquidations fueled this whole move. 1.5 million, $500,000. So, $3 million got liquidated right in here in 3, 6, 9 minutes. So when a lot of money gets liquidated, we have to gather interest again into the markets. As you can see, the market's not interested after that kind of danger. So we slowly gather interest. And of course we are going short. We are pointing out this is just ever so slightly headed downwards, convincing people to take a short. And if they took a short anywhere in here, they got stopped out. Obviously they could have took them right at these peaks, but that's very unlikely. But anywhere except those very peaks, they got stopped out or even liquidated if they're 100x right here. And that gives the market a chance to go down. And once it goes down, we set this range right here and right here. Right between these 2 points, we have this little flat spot. And if you know anything about SMC concepts, right here is our ICT liquidity sweep. We go long here according to ICT. And what happened if we went long here? And if we moved our stop to break even at any point, we were already stopped out. But let's say we didn't do that until somewhere in here. Let's say we beat this chop. We went long here. We knew not to move our stop here. But somewhere in here we decided to move our stop to break even, which is about there. You'll see we went up just enough to give us not quite 1R. Sorry, I don't have the tool to show you, but it's not quite 1R. And then just enough to convince the longs that we're fine. And then right when they stop out, our old VC buddy right here, he learned his lesson last time. Let's do a quick little recap to remember. Last time he dumped 1.2 billion on the market. This time he knows better. He dumped 2.9. You can see it right here. 2.9 billion this time. And by our little liquidator thing, we did not miss the 50x this time. We nailed the 100x both times. This yellow line. But look, we missed the orange line here. We are not missing a second time. And it was a similar thing. Volume went down. We're about 40 million average delta volume here, but compare that to, 80 million, 300 million, like 30 million is when it's starting to die off. But a little bit of a strange, this one went a little differently than last time. But obviously obviously our liquidity gets swept right here. But if we went long anywhere in this wick, which was fine in our last time, we got stopped out this time by this huge wick, which we can't see it in a 3-minute chart, but in a 1 minute, that's a big scoop. And that's for if we're going long up here. That's to liquidate the longs. These longs, liquidated. And you can see up here, this number, 2 million liquidated right there. Show you again real quick. 2 million liquidations right on that 3-minute bar. And what did that do? Push price up. And where's our top? Oh, I forgot to mention, if we did move our stop here, look, that 3 billion, you slipped. Our ICT buddies who moved their stop to break even slipped all the way down here. And their stop loss did nothing. They got liquidated, no stop loss. As you can see, by 8.6 million liquidated. And then we liquidated again over here. We liquidated the longs from even this side. And then we pushed price up. We'll get more into the nitty-gritty later, but I just wanted you to see some manipulation plays, because you can see that these big bars are all right at the points of liquidation. Thanks for watching my video, and I hope you learned something.